Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Tuesday the 24th of September. Now there has been basically very much of a quiet consolidation that has developed overnight. There's been a little bit of a risk aversion that started to creep back into the market though, and we've seen that with treasury yields which continue to slip lower. We've seen that with the dollar which starting to sort of edge higher again, and if you look at the charts, which I'll go through in a bit in my later videos, you'll see the yen which is starting to gain ground again. You'll see gold which is starting to also gain ground. So it's an interesting little trend that's starting to develop, although it's still in a bit of a consolidation phase at the moment. Interesting that equity markets are beginning to also show signs of consolidation. Sort of moved sideways really in the past couple of weeks as this rally of the S&P 500 and Wall Street has just started to tail off a touch, and that is that's starting to also be playing out. Now what we've seen this morning is as I said, a little bit of consolidation. You've had some data, and we are looking at the data points today. What we've seen is the German IFO numbers, which I'll show you the chart of the IFO, which ticked higher actually on the business climate, which was the main reason being that the current conditions actually edged a bit higher, but the expectations component, that's what the forward-looking indicators are, that continues to fall away. That suggests that the German economy remains under pressure into the coming months, and maybe this little bit of an uptick is a pause in that deterioration in the German economy. But certainly that IFO data is not all that great. You can see that here on the numbers. That's an interesting development there in the German IFO. Now this afternoon we're looking out for a few factors really. We're looking out for the Case-Shiller House Prices Index, expected to tick a slight amount higher to 2.2%, although that is still very low in terms of house price growth. That was for July. And then later into the afternoon also we've got the consumer confidence, 133.5 down from 135.5 for the consumer confidence for the US. This is the consumer confidence and the Michigan sentiment. See Michigan sentiment just slipping away a bit. Consumer confidence expected to come back, although expected to be above for where it's been for most of 2019. So consumer confidence remains okay for the States, certainly. And also we're looking out for the Richmond Fed as well, which is expected actually to improve to +2 from +1 at 3 o'clock again. So right, that takes me on to my chart of the day, which is silver. Now as I said, gold is starting to edge higher. Silver is being the main mover in the precious metals, which is dragging that, silver is quite often seen as basically gold on steroids, and what we've seen is that the silver price really accelerated high yesterday, 3% higher, breaking out above that that reaction high at 1846, above that 23.6% fib level of the big rally from May to September actually. And that sort of breakout really does suggest that with the momentum indicators confirming the move, acceleration higher in the stochastics following a bull cross, MACD lines starting to turn a corner, RSI back above 60, it really suggests that there is a bit of a turning point in that traction of the move higher. That consolidation in the move lower seemed to find support and build support from 1735, that old breakout level, and is now starting to build higher lows and higher highs. So you'd be looking to buy into weakness. That 23.6% fib level is a bit of an area, 1837. You can see here on the hourly chart, a breakout above 1846 is basically holding as support. 1820 is another sort of breakout level that has been held as support. So a few levels are being built of support, and you can see the improvement in the momentum. The RSI moving above 70 on the hourly, holding above 50 actually on the recent unwind as well. So little corrections are a chance to buy, it would appear, on silver now. You've got the MACD lines also positively configured, stochastics turning higher again from a bull cross on the hourly as well. So corrections are a chance to buy. Now we'd be looking for a break back above 1874 was the overnight high. 1880, you could argue, a basis of resistance as well. But basically, having broken out above that reaction high of 1846, really does actually effectively reopen the highs at 1964. So buying into weakness seems to be the way to play silver, as the precious metals seem to be starting to gather momentum once more. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars. Thank you.